Dr. Rubenstein has served on the APMA Board of Trustees since 2009. So we're really happy to have him here with us today. He is a past president of the Virginia Podiatric Medical Association and currently practices in Reston, Virginia, where he is affiliated with the Foot and Ankle Specialists of the Mid-Atlantic. Thank you for starting things off with us. Dr. Rubenstein, take it away.
Thank you, Brandon. Good afternoon. As introduced, I'm Seth Rubenstein. I am President-elect of the APMA, and I want to welcome everyone to today's webinar. I know that these are difficult times for you, your patients, employees, and family members. Please know that the APMA leadership and staff are here for you. We are working to provide timely, informative resources for APMA members during this unprecedented public health crisis. We are pleased to be partnering with Marcum LLP to provide today's webinar to help podiatric practices survive during this pandemic. Marcum LLP is one of the largest independent public accounting and advisor services firms in the nation. For additional resources for podiatrists, visit APMA's comprehensive COVID-19 resource page at apma.org/COVID-19 and reach out to us at askapma.org with any questions or comments. Thank you for participating in today's webinar, and I wish you all good health. It is now my pleasure to turn the webinar over to the professionals at Marcum.
Again, thanks so much, Dr. Rubenstein. And now I'd like to introduce today's presenters. We have four of them: Mike Trabert, Don Minotas, Marianne Zarnota, and Dave Mustin. Mike Trabert is a partner in the Advisory Services Group, the leader of the Value Acceleration / Exit Planning Services Group, and is the leader in the firm's Transaction Advisory Services Group. The guy gets around. Mike regularly hosts Owners Roundtable workshops, which are full-day interactive workshops designed to help business owners maximize the value of their businesses and exit on their terms. Mike was recognized as the 2017 Exit Planner of the Year by the Exit Planning Institute. Don Minotas is a managing director in the firm's outsourced managed services and consulting group, and she has more than 20 years of experience working with and in various industries, including retail, food service, banking, healthcare, manufacturing, and nonprofits. She provides outsourced accounting services such as bookkeeping, including QuickBooks setup and maintenance, financial statement preparation and analysis, business tax returns, and general business consulting services. Don is also our subject matter expert in QuickBooks for sure, budgeting and forecasting, and of course, financial analysis. Marianne Zarnota is a partner in the firm's Tax and Business Services division and has developed expertise working within the medical and dental professions. She has Big Four accounting firm experience and provides services such as accounting, tax, business valuations, compensation modeling, and structuring. She also consults on mergers and acquisitions, practice expansion, buy-ins and buyouts. And Marianne is also our subject matter expert in accounting and business management, accounting services, healthcare, tax planning, and compliance. Finally, Dave Mustin is a partner in the firm's advisory services. He's been with us for over 25 years and has over 25 years of professional management and consulting experience, Dave also specializes in developing and executing strategic business growth and transformation initiatives and has extensive background in formulating and executing technological strategies for your company and digital transformation initiatives. Dave is our subject matter expert in strategic growth planning and realization, business transformation, change management, IT system selection and implementation, mergers and acquisitions, and IT strategy. For your convenience, we have muted everyone's lines to help get background noise. If you have joined us and not muted your line yet, please assure yourself that your line is muted. Feel free to click that mute button just so we can make sure the quality of the call is good. Also, we will be recording this webinar and be distributing it to you all later. Further ado, I'd like to turn it over to our first presenter.
Brandon, thank you very much, and thank you for all of you for joining us today for our presentation. And today's all about providing awareness and education you as it relates to our current economic environment. So we're going to have tons of information to cover, and a lot of things are changing, some daily. And so we're going to have you drinking your fire hose today. Well, welcome. So what we're going to talk about today is two of the available SBA lending programs, how to apply for those, items that you'll need to package that together. We'll talk about various provisions of the CARES Act, including the Paycheck Protection Program. There's been, as many of you probably heard, an automatic extension to file and pay your tax returns, moved forward from April 15th. We'll talk about how to preserve value in the current environment and also action steps to weather the storm. Okay. So indeed, these are interesting times. So empty shelves at the supermarkets, empty streets on the, in New York City, and unfortunately, offices, physicians' offices less populated than we'd like to have them. So to kind of set the stage, recent survey, how long would your business survive if sales stopped completely? So about 20% would only last for a month. Another about a third said they would estimate being in business from 1 to 3 months. And so within 6 months, about approximately 3/4 of the businesses estimated they would be out of sales, out of business if they didn't have sales. And so we all know what's happening in the restaurant industry. And we thought this slide was really a telltale slide. And restaurant bookings for less than a 2-week period dropped by, as you know, 100%. And so now that I've presented a lot of gloom and doom, I'm going to turn it over to my colleagues to provide some opportunities and solutions to the situation that we find ourselves in now. So first, I'll turn it over to my colleague, Dawn Minotis. Take it away, Dawn.
Thanks, Mike. Welcome, everyone. Hope you are all having a great day. Before I get into my part of the presentation, I just want to preface this by saying we've tried to keep these slides as up to date as possible, as well as the information that I'm going to present to you as up to date as possible. However, it's a very fluid situation, and these loan programs are constantly changing, and more information is becoming available on a daily, sometimes hourly basis. So this is as we know it today. This could change as soon as we get off of this call. But what we know today is that there are 2 separate disaster relief programs available for small businesses right now. This is the Economic Injury Disaster Loan Program, which we'll call the EIDL. The other is part of the stimulus relief package known as CARES. It's a $349 billion program called the Paycheck Protection Program, which we'll refer to going forward as PPP. The EIDL has been around for quite a while now. It is actually not a new program, and it's not specific to the coronavirus, although there have been some changes made to it as a result of the CARES Act. But this has been around for any area declared a disaster area in the US. Typically, it's been for areas such as a county or a state that's been affected by a hurricane or a flood. Never in the history of its existence has the entire United States been declared a disaster area. So as you can imagine, it's had to change and modify to address this issue. Basically, the EIDL is available to for-profit or not-for-profit entities, and it is available to those entities that have experienced substantial economic injury and are unable to meet its working capital obligations. Similarly, the PPP program is available to also keep paying your working capital. However, it's more limited in use, and we'll get into each of these as we go further into the slides. First, I want to talk a little bit about the EIDL program. So business, as I mentioned, any small business that's affected by this disaster is eligible for this program. The only criteria is that you have a credit history acceptable to the SBA. And by that, I mean, you have the ability to repay. So it's not looking at your current economic condition now as we're in the midst of the disaster, but it's looking at, were you a viable business prior to that? It also is looking to make sure that you have suffered some sort of working capital damage. These loans are available up to $2 million each. There's also an aspect of these loans that is an advance, which could turn into a grant. There's 10 billion of these have been made available to eligible applicants for this coronavirus disaster specifically. The way that works is you can apply for them, and while they are assessing whether you're eligible for the actual loan itself, you can get up to $10,000, which you will not have to pay back even if you are subsequently denied the loan. If you do end up getting one of these loans, the interest rates are 3.75% for for-profit entities and 2.75% for not-for-profit entities. As mentioned earlier, you can use the proceeds from these loans to pay any fixed debt obligations, payroll, accounts payable, and other working capital needs in order to run your business. These are not to be used for reducing debt. So you can make your normal monthly payments with them. They are not meant to refinance existing loans, nor are they meant to help expand your business. Any loan issued above $25,000 from this program may require collateral. You will not be precluded from getting a loan if you don't have collateral, but if it's available, they will take the collateral against the loan. Also, for this loan, any loan that's issued above $200,000, I believe, requires a personal guarantee. In order to apply for this loan, you apply for this one directly through the SBA, and there's a specific link which we've listed on this slide that you need to go to. I don't know, for those of you that have been aware of this program for a while, over the last week or so, the application process has changed several times. This is the most current link and application process that's available out there right now. If you go online and you apply, this automatically puts in an application for you for the up to $10,000 advance while they are reviewing your loan application for additional funds. Right now, the documents that you need, again, are just the online loan application that initiates the process. They may ask for forms such as the IRS Form 4506T. They may ask for tax returns. They may ask for a personal financial statement depending on the size of the loan, and other documents once you get further into the application process. The payment terms are based on the borrower's ability to pay. And again, that's based on historical performance. The terms could be up to 30 years, and there is payment deferment for these loans up to a year. We're estimating the decision time to receive these loans is 2 to 3 weeks. I am guessing that it may be longer based on the volume of applications that they're getting, and disbursement should be within 5 days. This is an example of what the loan application currently looks like. You can see it's just an online application, check some boxes, and it will walk you through step by step for the information that's needed. Moving on to the Paycheck Protection Program, or the PPP. This is different and separate from the EIDL program. This loan needs to be applied for through a bank or lending institution. From what we know right now, businesses are not eligible for both loans. We do know that if you apply for the EIDL advance grant up to $10,000, that can be rolled into the PPP if you subsequently obtain a PPP loan. However, that portion will not be eligible for forgiveness, which we'll get into later. The covered loan period on this loan ends on June 30, so it's active today. Applications, I believe, were started to be accepted by the bank as early as Friday. Some banks currently are still not accepting applications, but anticipate that the application process will open within the next day or two. Eligible businesses have up to 500 employees and have to have been in business on February 15th, 2020. That's really the only criteria in order to be eligible for this loan. The borrowing limit for these loans is up to $10 million. It's a calculation, it's the lesser of 2.5 times your payroll costs, which we'll talk a little bit about, up to the $10 million. These loans are available through June 30 only. This program is supposed to give lenders more authority in the decision-making process of granting these loans in order to expedite the process so that people can get these loans into their hands quicker and start paying people with them. Again, you only had to have been in business on February 15, 2020 and had employees with payroll. Independent contractors do not count towards your payroll for purposes of this loan because they are able to apply themselves. There will be no borrower or lender fees. The SBA is paying these, so there should be no loan application fees associated with these loans. The government has also increased its guarantee to the banks of these loans up to 100%, whereas normally the SBA loans, depending on the dollar amount of the loans, are either 75% or 80%. This guarantee exists through December 31st, 2020. At that point, it will go back down to the normal guarantee rate from the SBA. Again, the banks have the authority to issue these loans. We are seeing that most banks at this time are only accepting applications from their current customers first. Some banks have already stopped accepting applications because they've hit their limit. But the application process also varies from bank to bank, what information they're asking for. Generally speaking, they want confirmation that you have less than 500 employees. And this is based on a 12-month average, which could either be the fiscal year or the calendar year 2019 or a 12-month period starting with March backwards, so April 1st of 19 through March 31st of 2020. As mentioned earlier, it's available to sole proprietors, self-employed, and independent contractors as well. The loan amount is the 12-month average monthly payroll cost times 2.5, and this is up to $10 million. Payroll costs can include wages, healthcare costs, so medical costs if they're part of a group plan, retirement benefits, and certain taxes. The taxes that are includable are basically only your any state and local taxes that are paid by the employer and assessed based on compensation. So the easiest example I can give you is your state unemployment taxes. You would be allowed to add those in as well. The payroll costs are limited to $100,000 per employee. So any employee that makes over $100,000, you would need to cap at the $100,000 and exclude anything above the $100,000. The employees must reside inside, their primary residence must be inside of the United States. And you cannot include any sick or family leave any employees that are on sick or family leave that are receiving benefits under the Families First Coronavirus Response Act. The payment terms on these loans are interest rate of 1% for the unforgiven piece, and you need to pay them back within 2 years. You can defer the payments for 6 months up to a year. The restrictions on the uses of these loans, and this is something that just came out in the last day or two, you must use these loans, and this is not just for forgiveness, this is in general, whether you get forgiveness or not, you must use these loans 75% for payroll costs. The rest can be used for mortgage interest, interest on other debt obligations, rent, and utilities. From what we understand, if you have received an EIDL loan prior to March 27th, that this loan will be refinanced into the PPP loan. Depending on what you used it for, however, it may not be eligible for forgiveness. Again, there's no fees. If you do obtain forgiveness on this loan, it will be considered canceled debt, but it will not be taxable for income tax purposes. There's no collateral and no personal guarantees required on these loans, regardless of the size. And you are not required to not have any available credit elsewhere. So you can have existing lines open to you for use and still be able to apply for and be granted this loan. After an 8-week period, you are eligible for loan forgiveness. There will be an additional application process where you will have to provide supporting documentation to show what you spent the funds on. You'll have to show that you've spent 75% of these funds on payroll costs. The remaining 25% could have been used for interest, rent, and utilities. A caveat here is that the only interest portion that's forgivable is that you used for mortgage interest, not interest on other debt obligations. The forgiveness may be reduced if you have not restored your FTE or wages, if you've made salary reductions to certain levels by June 30th. So for example, the FTE must be reduced to the same level of FTE, and it's an average calculation and it's based on per pay period calculation. You can either pick a look back period of February 15th, 2019 through June 30th, 2019, or you can use January 1st, 2020 through February 29th, 2020 as your look back period. So you have to bring your FTEs up to that level by June 30th in order to not have your forgiveness amount reduced. In addition, and it's not either or, it's in addition, you cannot have reduced your wages, and this is on an employee by employee basis, by more than 25%. If you did, and as long as you brought them back up to the level, as long as it's not more than a 25% reduction by June 30th, you will not have any forgiveness reduction in that respect either. Now, the look back period for the wage reduction is different from the look back period for FTEs. The look back period for the wage reduction is your last full quarter of employment. So if you furloughed employees in the first quarter of 2020, your look back period most likely will be the fourth quarter of 19. If you did not start furloughing employees or did not furlough any employees at all, your look back period most likely will be the first quarter of 2020. This is an example. I know it's kind of tiny and hard to see, but this was the application process, the application that the SBA issued for banks to use as guidance. I do know it's suggested, it's not required. The banks are able to use their own application process as long as it covers the items that are documented in this loan application. They tried to keep it as simple as possible. This is it. This is 2 pages, and that's all that needs to be completed. Probably the most important part of this application is the certifications. I know you can't see it, but there are 4 or 5 certifications that you have to make when applying for this loan. 2 of the most important ones are that you have been, the uncertainty of the economic times make it difficult for you to pay your working capital obligations going forward. And you also have to certify to the fact that you will use the funds for the uses specified. So the payroll costs, the rent, the interest, the utilities. So these are 2 options. There could be other options available for you out there. We suggest you reach out to your lender. We know a lot of the banks are offering forgiveness on existing payments on existing debt up to 3 months. They're allowing you to make interest-only payments. A lot of lenders are looking at expanding or increasing existing lines of credit, or offering up additional loans outside of this program. The other thing to look into is business interruption insurance. A lot of policies exclude interruption for viruses, but it can't hurt to check with your insurance provider and see if your policy may cover some of your expenses during this time. That was all I have. So now I'm going to turn it on over, I believe, to Mary Ann.
Great, thank you, Dawn. Next, we'll cover the CARES Act, and The CARES Act has a few tax provisions. CARES Act provides cash rebates at $1,200 for an individual, $2,400 for a married couple, and $500 for each child. Now, to get the full cash rebate, the individual's income must be under $75,000 for an individual and $150,000 for a married filing joint return. That amount of relief phases out for an individual beginning at $75,000 with a reduction of $5 for each $100 over $75,000. As a result, the payments completely phase out at $99,000 for an individual and $198,000 per couple. Second, the CARES Act has an employee retention credit, and this was designed to keep employees on their payroll. Eligible employers will get credit against employment taxes equal to 50% of qualified wages up to $10,000 in wages for each employee. A qualifying employer is one that either had its business fully or partially suspended, or whose gross receipts are below 50% of the comparable quarter in 2019. Please note that the employer who receives a loan under the Act is not eligible to claim an employee retention credit. There is also a deferral of payroll tax payments for 2020. The employer portion of FICA will be delayed until 2021 and 22 at 50% each. Again, the credit is not available to employers receiving debt forgiveness under the Act. Credit is for wages paid between March 27th and December 31st. Among the significant business tax provision of the CARES Act, the Act allows for businesses and individuals to carry back net operating losses from 2018, 2019, and 2020 to 5 prior tax years. As it relates to qualified improvement property, the business can elect 100% bonus depreciation, or if you choose to elect out of bonus depreciation, qualified improvement property can be depreciated over 15 years instead of 39 years. As a result, you may consider filing an amended return for 2018 to deduct 100% bonus depreciation or to change the depreciable life from 39 to 15 years. The CARES Act also includes several provisions that expand plan participants' access to retirement funds. Eligible participants can take penalty-free withdrawals for up to $100,000 by December 31st. The income taxes due on the withdrawals may be paid over 3 years. Also, there is an increased plan loan limit of $100,000, which is an increase from the previous limit of $50,000. The Act expands unemployment benefits in material ways. The definition is expanded to include self-employed individuals as well as independent contractors. There is a $600 weekly increase through the end of July, and there's an additional 13 weeks of benefits beyond what states allow. These new benefits are funded at the federal level, but will be administered by the states. An interesting fact here is the U.S. jobless claims were 3.3 million 2 weeks ago, which is 4 times more than the previous record, which dates back to about 1982. And last week, the U.S. jobless claims were at 6.6 million. Additional tax relief includes automatic extensions to file and pay federal income taxes until July 15th. This applies to individual, partnership, corporations, and gift tax returns. Also applies to IRAs and health savings accounts. Now, you don't need to file a formal request for the extension with either the Form 4868 or Form 7004 on April 15th. This extension is automatic, and on July 15th, you are still allowed to extend the returns as you have in the past. There's no penalty or interest from April 15th to the new date of July 15th. This does not apply to payroll or excise taxes. In addition to not having to pay your tax due, the first quarterly estimates have also been delayed. Now, while the IRS will allow taxpayers to delay the filing and payment to July 15th, most states have conformed to the 715 extension for individuals. However, there are states that have not followed suit. For example, Idaho of June 15th, Mississippi, May 15th, and Virginia, June 1st. For the latest on your state, you can always check your respective state revenue website. Next, we have the Families First Act. There is additional relief in terms of refundable payroll tax credits in the form of business credits for paid sick leave and paid family medical leave. This applies to private companies with less than 500 employees. Now, the Families First Act provides that certain health care providers and emergency responders may be excluded from the application of the Act. However, new guidance defines healthcare providers broadly for purposes of the provisions. So although some healthcare providers are choosing to be excluded, you should still speak with a labor attorney for proper notification to your staff. Under the Act, sick leave is paid by the employer for the employee's full wages up to $511 for 10 days if they are unable to work because the employee is subject to quarantine, or the employee is advised by a healthcare provider to self-quarantine, or the employee is experiencing symptoms. In addition, the employer will pay 2/3 of their wages up to $200 per day for 10 days if they are unable to work because the employee is caring for an individual subject to quarantine, or if the employee is caring for a child while his or her daycare facility is closed. As it relates to the family leave portion, if the employee is unable to work due to caring for a child, there is an additional paid leave of 2/3 of the employee's regular pay, up to $200 per day for up to 10 weeks. This is in addition to what we have on the previous slide. Also, there's a credit for health insurance coverage paid during leave for the affected employees. In our first example, we have the employer has paid sick leave of individuals totaling $5,000. The normal payroll tax liability would have been $8,000, and the employer would pay $3,000. In the second, the sick leave paid of $10,000, payroll tax liability would have been $8,000, and so there's a refund available to the employer of $2,000. Now, eligible employers will be able to report their total qualified leave wages and related credits for each quarter on their federal employment tax returns, or alternatively, the employer can request an advance of the credit from the IRS by submitting the new Form 7200. And now my partner Dave will take us home, beginning with the other important items to consider for your practice.
Thanks, Marianne. We've covered an awful lot over the last 40 minutes or so, and there is a lot to remember. We will make this presentation available in a recorded format to everyone on the apma.org website. There'll be copies of the slides and actual recording of this presentation as well, so check the apma.org website, get a replay. We know it's very difficult to capture all this information, so we would suggest you check there. There's been a lot of questions coming out, and we have to admit that things are changing pretty rapidly along the way, and we're doing our best to answer the questions, but we are awaiting clarification from the government on a lot of the aspects of the coverage. So what we'd recommend is that you continue to check back the APMA website. You're welcome to call any one of the presenters either through phone or email. Our contact information will be at the end of the presentation for further questions and further clarification. There is a lot of detail, and we'll do our best to answer the questions as we go forward. So, of all the information we've covered, the EIDL loans, the CARES Act, the Paycheck Protection Program, the tax changes around filing and payments, really are programs and incentives by the federal government to help you be successful in your practices and your businesses. It is important to remember, though, that those are just support mechanisms and tools to keep you liquid over the next few months while this coronavirus is moving forward and practices are either shut down, working at very low levels. We think there are a number of things that you can do to prepare for this and to help you be successful in going through this difficult time period. And so the next few slides, I'd like to cover 6 points that we think are vitally important to help you be successful while you're winding your way through these perilous times. What I would say is the first element is really to prepare and have a plan. In these times of crisis, it seems like all we're doing is reacting and trying to make sure that we respond to the urgent crisis in front of us. But it's important to understand what the possible scenarios are, what the risks are, and what you can do to get through that. So some scenario planning where you sit down and start to understand what the possible issues that are coming at you and what the risks are that affect your practice are important to document, to write out, and spend some thoughtful time on, and to understand what you can do to be proactive rather than just a victim, but to take control of your own destiny. One of the things that's really important to mention on this slide is that where you can identify new services that may be resistant to this, where you can serve patients that may be available to you, and where you can identify new opportunities to take care of those patients is really, really important to identify. In every market change, in every environmental change, there are opportunities to offer new services into the community. If you can take advantage of that, it may position your practice differently than you had in the past. And finding ways to position your practice for success over the near term and the longer term is a huge opportunity for you. So it's time to step back and think about that. One of the examples we have of that is locally here in Northeast Ohio. It seems a bit odd, but there is an alcohol manufacturer that has moved to creating antibacterial fluids and sterilization fluids for local hospitals. And they are producing those and selling those to the hospital because there's not enough capacity for the hospitals. So people are finding unique and new ways to create new products and services into the marketplace. So I'd ask you to stop back and see if there are things you can do that might assist and might provide new services, new opportunities for your practice. What we also find is that in this day and age, that it's really important to manage your cash flow. Cash is critically important to make sure that your practice stays viable in the near term and the longer term. This is the main reason why the federal government is making these loans available, even forgiving the payroll, is that they want to be able to make sure these practices stay viable and they stay in business. We talk an awful lot to our clients about the ability to come out of this crisis. And one of the challenges we discuss is that if you lay off all your employees, will those employees be there as the economy comes back and your practice seeks to reestablish? People are scrambling for jobs. And if your entire practice is laid off, especially in particular, highly valuable employees are laid off, the question is, will they be there when you're seeking to restart your practice up if you shut everything down? One tool that we think is very important is what we call a 13-week rolling cash flow forecast. If you don't have one of those and your office manager doesn't have the ability to create that, I'd suggest you talk to your local accountant. They can help you prepare that. What that does is document all your expenses. It says where are those expenses going, and each week where are those expenses that are going out. And on the flip side, it looks for what is the revenue that's coming in, what payments are coming in from private insurance, what might be coming in from Medicare or Medicaid, what might be coming in from a private pay situation. As you document that out, what you want to look for is those periods, those weeks, and those months where expenses may be exceeding your income and where you need to tap into either a loan, cash reserves, or have some other method of personal draw that you're going to draw upon to fund those things. And that's what 13-week rolling cash flow forecast does. It helps you understand where those times may be where you're going to have a cash shortfall. In particular, where you can accelerate your accounts receivable and your collections either from insurance companies, from private pay situations, you want to be able to do that. You also want to be able to identify opportunities where you can slow down your payables. One thing that a lot of our clients are doing is turning to their lenders and looking for the ability to take traditional loans and take their traditional loans they may have and postpone payments both on principal and interest off to those lenders. Many banks nationally are working with their borrowers to make sure that they can push off those loan payments, both principal and interest, or possibly make interest-only payments on their loans. We've already talked about the fact that the federal government is expanding lines of credit through the SBA loans and through the Paycheck Protection loans. But many traditional lenders and your traditional banks are offering their own loans to help businesses get through this. Banks are very strong right now. Take advantage of that cash that they have on hand to make sure you have the liquidity for your business. Again, any opportunity to limit expense, take advantage of that. We think it's also very important to stay close to and talk to your patients. Obviously, it is a difficult time. There are many patients that need services and need to be taken care of, from pain issues, from critical issues that they may be experiencing. And it's important to understand where there's an opportunity to take care of those patients that you do that. Where they have critical needs and you have the opportunity to prioritize them and address those opportunities, make sure you do everything you can to take care of those patients. Those chronic patients that come back to you time and time again, make sure that you communicate, talk to them. If you can't get them into your office, can't get them into a critical care situation, make sure you communicate carefully with them now. Make sure they know that you're attending to their care when you can and where you can. Where there are opportunities to seek new patients and to be open to taking new patients on, make sure you're aware of that. Make sure you attend to those patient opportunities. Just because your staff may be reduced or because your practice may be working fewer hours, make sure you are communicating with people wherever possible and take on those patients that you can to take care of them. It's also important, very important, to take care of your staff. Every practice has critical staff that help them run their practice very well. They bring in valuable expertise. They've been there for many years and they know the practice in and out. They know the intricacies of insurance billing. They know the intricacies of scheduling practice appointments, and they are vital. And wherever you can prioritize those valuable staff and keep them on board, it's vitally important that you do that and tend to them wherever possible. If there's opportunities to understand underperforming staff, and either to confer with them, to schedule with them, or to take other actions there, consider what you need to do. Be aware of taking care of the valuable staff and making sure that lower performing staff are addressed as appropriate as well. This is also a critical opportunity if staff have a lower demand for their time and their needs. This is a great opportunity to spend time on training staff, on new processes, new practices, new procedures, new software to make sure practice books are established for standard practices in the office. Make sure that you take the opportunity where you can to train your staff and get them up to speed so they're better versed and better skilled when they come back and this practice starts to ramp back up again. It's also important to focus on your marketing messages. People believe that practices are shut down or work is not being done. Where you can take the opportunity to make sure your messages are out there, where you're communicating with your clients and your patients about when you think you may be coming back. If you do have practice hours, that you're making sure your patients know that you're taking patients on. Make sure that you take that time to send those messages out, either through email, through phone calls, through traditional mail. Make sure those messages are staying in front of your patients. You're communicating frequently about what you're doing, what your hours are, and if you're not holding office hours now, when you expect those hours to return. Again, make sure you take this time to train and retrain your office staff. If you don't have any practice indicators of success, don't have a working dashboard, this is a great time to look at your data collection office practices inside your office and start to understand those indicators, what makes success in your practice. If you understand revenue from year to year, you can track that and document, that's an important thing to know. To understand a ratio of private pay versus Medicare versus Medicaid versus other insurance forms, it's important to understand that and document that. Understand gross margin and net margin. Understand customer retention, patient retention, and patient churn. Understand what patients you haven't been in contact with for an extended period of time. This is a great opportunity to start documenting that, understand what really are the metrics and the numbers that drive your practice, and understand what are the things that you have to attend to make sure that your practice is growing and thriving. And if you're in a down period, take this time to start building those dashboards, start understanding what can position you much better as you start to come out of this coronavirus dip. And if you need further information on that, we'd be happy to take phone calls and talk you through that and start discussing with you what we can do to help you put those things in place. What we'd like to do is also take a few minutes to point you back to some additional resources. Dr. Rubenstein talked about the COVID-19 site, the apma.org website. Please turn to that for further information from APMA. This webinar will be there as well as copies of the slides. We'll get questions that you're posting out to the Q&A panel out there as well with as many answers as we can. And I would reiterate that many things are changing rapidly, daily, if not hourly. And we will get clarification as often as we can out there to the website. You can also check the SBA website. This website, the Coronavirus Guidance Loan Resource, is not the application page. That is on the previous page in this webinar. But this will provide additional information on SBA loans, issues from the COVID-19 situation. You can turn to the CDC for further information on the coronavirus and good practices for sanitation and healthy living. I would also say that Marcum has our coronavirus website out there, and we are posting new webinars all the time out there. There are blog posts and lots of clarification on the tax issues, on the SBA loans, on the Paycheck Protection Program, on many other issues that the government is providing out there for resources. So feel free to turn to any of these sites for further information. What you see on this last page is the contact information of Mike, Dawn, Marianne, and myself. There are phone numbers and our email addresses. You're welcome to reach out to any one of us for further information on any of these topics. I know that there are a lot of questions out there pertaining to physicians and these practices, and we would say we're looking to research this and find additional information. Marianne in particular has a tremendous amount of expertise in the healthcare arena. Provide that information as we find it on our website, and we'll get that to you on the APMA website. So at this point, what I'd like to do is turn it over to Brandon and see if we can answer further questions from you.
Thanks so much, Dave. So we have a few questions that have come in, and if you have a question, feel free to submit it in the Q&A tab on the WebEx platform. But we have had a lot come in through the entire webinar, so I'm just going to go through a few of these, and we'll answer as many as we can within the 9 minutes we have. And if you know the answer, my panelists here, if you guys have an answer for this, I just ask that you unmute your mic and give a response. So our first question is, how does PPP count part-time employees as far as loan amount and for loan forgiveness purposes?
Part-time employees are included. Again, it's an average wage that you've paid them over the last 12 months or throughout 2019. So you would definitely include them in your calculation for the loan amount.
Great. The next question is, do I have to rehire all of my part-time or full-time employees? What if I don't have a need for all?
So the requirement is that you bring your FTE, and again, it's a full-time equivalent calculation. I don't have a definition of how the SBA is going to interpret that, whether it's a 30-hour work week or a 40-hour work week at this point, but it'll be a per pay period calculation based on the look back period, which is either February 15th of 19 through June 30th of 19, or January 1st of 2020 through February 29th of 2020. So you do need to bring them back up to that equivalent level by June 30th. You do not have to bring them back up immediately. You can slowly ramp them back up. The only caveat I would say there is that the more you can pay out during that 8-week period, the more that you're going to have eligible for forgiveness. There will just not be any forgiveness reduction as long as you're back up to that level by June 30th.
Great. We have a couple questions on unemployment compensation. The first being, generally, how does unemployment compensation interact with PPP?
I can take a stab at this one. I'm not as well versed in the unemployment aspect of this as I am in the SBA part, but from what I understand, if you do bring an employee back and they are on unemployment, it will reduce the amount of unemployment that they're being paid. I don't believe it will preclude them from getting unemployment in addition, but it will reduce the amount that they're receiving.
Great. Another question along those lines. Are there advantages for staff/businesses to go on unemployment than for a business to take out a PPP loan?
I think the biggest advantage that I'm hearing right now is depending on the salary level of the employee. In some cases, it is more advantageous for an employee to be on unemployment than it is to be paid their regular wages, because the CARES Act has offered an additional $600 to be added on to whatever the employment benefit would be up through July 31st. So in some cases, employees may earn more with that additional $600 than they would if they were just brought back onto payroll.
Thank you. The next question we have is, how do you count salary for sole proprietors or the business owner who doesn't take a salary? Is it gross? Is it net? Any thoughts?
So for sole proprietors, your salary that you would include in the calculation would be whatever your Schedule C net income was, so your self-employment income on your tax return. I do know that right now, because of the extension of the tax deadline for 2019, a lot of the banks are accepting financial statements to show what your net income was for 2019, to use that as a basis for what your salary would be in the calculation. If you are taking guaranteed payments, or if you happen to be a partnership, it would be your K-1 income that you would get from that partnership.
Great. Our next question is, the loan forgiveness is tax-free, but do employees pay tax on the salary? But what about the sole proprietor? What is their tax liability?
Employees that you bring back or that you continue to pay would still pay their payroll taxes, as would the employer portion still be required to be paid. I believe that the sole proprietor, the way that they would look at the payments made to you during this time would be considered as if it were a draw, and you would still only pay taxes on your net income of the business. But again, more guidance to come on that. Technically, sole proprietors are not able to apply for the PPP loan until Friday. So we've been primarily focused right now on getting more guidance on businesses with W-2 employees. I'm hoping that once the application process opens up for sole proprietors, more guidance will come out on that.
Great. Here's an interesting one. How does the EIDL loan and PPP loan work together, including the $10,000 tax advance?
That's a really good question. We're still trying to get our arms around that. What we do know at this point is that you can apply for the up to $10,000 EIDL advance that will be rolled into the PPP should you subsequently get that, but it will not be eligible for forgiveness because it's already forgiven. I don't know the answer to if you do end up getting the EIDL loan and the PPP, if you're able to have both, or if they will require you to roll in the EIDL to the PPP. I do know any EIDL loans that were issued or granted prior to, well, from January 31st through March 27th are required to be rolled into the PPP loan. I don't know if that's going to be the requirement for any loans obtained after March 27. There was some talk about you may be able to have both as long as they were used for different purposes. And if you did use the EIDL for payroll, that only that portion would have to be rolled into the PPP. But at this point, we're still waiting on more guidance. So I don't have a definitive answer for you on that.
All right. The next question, which loans should I apply for? Kind of broad, but maybe you have some insight onto that.
And it just depends on your circumstances and what you need to use the funds for. The PPP loan is primary purpose is for payroll, with the requirement that you have to use 75% of it for payroll. I would recommend, if your immediate need is for payroll, that you would apply for PPP. If your immediate need is for working capital only to pay bills, other bills that you might incur in order to operate your practice, then I might suggest just applying for the EIDL at this point. You can, if you're awarded both, you are able to decline one or the other. So I would, again, it's going to be on a situation by situation basis what your current and most pressing needs for capital are.
Great, and kind of related to the time frame here, is it better to apply for a loan closer to the date of reopening?
Well, I would say yes. However, there's a limited amount of funds that are available for the PPP program. The initial CARES Act only allowed for $349 billion. And I know it kind of seems funny to say only ahead of that large number. But from what I'm hearing, at the rate that the applications are coming in, I don't think that $349 billion is going to go very far. I have heard some rumblings that there's a possibility that they may go back and ask for another $250 billion. So it's been my experience with the clients, people that I've been working with, everyone's scrambling to get in to be first in line before the funds run out. Having said that, if we do get additional funds made available, it may make more sense depending on how long you think this crisis is going to last. I think that the hardest part about all this is not having a definitive end date. We don't know how long this is going to last. So having said that, I would not be surprised if this goes longer than June 30th, if there's not some sort of other stimulus or package that the government puts out. But again, nothing's guaranteed. So I guess my advice would be, if you think that you may have a need for this, apply now, because the funds could run out and there's no guarantee that any more will be awarded.
Thank you. And I think we have time for one more here. For those questions that didn't get answered, we had a lot coming in, and anyone who submitted them beforehand, we will be gathering those together and making sure you get some form of response to your questions. Thank you so much for all of your questions. The last question I have here is, I have multiple medical entities with different employees in each. Can each medical entity apply for a loan?
The answer is yes. The SBA is asking that affiliated entities apply together, and the normal SBA affiliation rules apply. So that's basically ownership and control and financial support. However, I am hearing that some banks are not following those rules and they're requiring each entity to submit separately. So I would probably check with your bank and discuss that with them, what they're preferring that you do.
All right. That is all the time we have today, everybody. We want to make sure we're staying pretty close to our schedule here. As I mentioned, we will be following up on any additional questions you may have submitted. We will also be sending a copy of the slides and a recording of this presentation for your convenience. Thank you so much for joining us today. We were so happy and thrilled to have such a great turnout for this webinar. I hope you learned something new. And by any means, any questions, please feel free to reach out to any of the professionals here on this screen. They all are very competent and know what they're talking about with this SBA loan stuff. Thank you again for joining us, and we hope you have a wonderful evening.